everyone everywhere is about to become an expert on shorting companies that are impacted by AI? Well, the big moves have already happened. I'm going to warn you of that. I'll talk a little bit about momentum and then talk about how that trade works. So before you go out and start shorting WPP and SGPI and Moody's, be aware that there is a rhythm to this market. Don't do that. Don't do that. Don't do that. Urgh. Don't like computers. I almost shared all my emails with you. That would have been great. That would have been real awkward. Let's dig in. Today, outlook remains bearish. Doesn't mean there can't be a squeeze. Doesn't mean that the markets can't just turn right back around and give us a little bit of a pop after a pre-market drop. Futures right now currently sitting down nearly 1% on the Nasdaq, 0.5% on the S&P 500, and the Dow is down as well. The big story I think that's more important is the fact that the Nikkei is down about 1.2%. But we got a lot of companies to be watching today in earnings. PANW, Palo Alto Networks, Medtronic, and we had the ADP weekly jobs report. Figure it out. Empire State, ongoing talks with U.S. and Iran. Fed speakers will be Barr and Daly today. And really, the key focus here, Bitcoin falling, crypto falling, gold falling. All right. Woo, it's a lot of color. I didn't drink any coffee. I just decided to make my screens very red so that it would hit me, make me very angry. Momentum strength currently. We don't need these numbers. Those are holdovers from the other day. We don't need that. Get rid of it. S&P 500 momentum, negative. Russell, negative. Momentum, negative. Where would you even consider getting back into some of these names? Well, 678 right now is the key line in the sand on the SPY, and we are watching 675.58. That's the 100-day moving average, and we've tapped that a couple of times going back to November. If we break under that number, well, what's our next target? The 200-day moving average, which is precipitously lower. All right, so Nasdaq, Russell, negative momentum. That impacts a lot of different things. And that AI trade is going to be probably the headline that drives a lot of this. Oh, there you go. All right, cool. Iran ready to reduce their uranium enrichment. IAEA visiting approves. Talk centering on the technical stage reports that Trump threatened to just hit them, even though Khamenei saying the U.S. Army needs to get slapped so hard it cannot get up. So mixed signals. Talked a little bit about this over the weekend, the idea that, well, the world of warfare is changing drastically. So any war is not going to be one that is fought with tanks and battleships. It will be fought with drones. And we have to pay very close attention to how oil is reacting. Oil is very choppy at the moment. We are seeing Iran holding their military exercises in the Strait of Hormuz. That's the big threat, right? The idea that they shut down the choke point where a massive amount of oil passes through each day. U.S. has threatened to strike if talks collapse, and oil, of course, could spike $5 to $10 pretty easily on a breakdown. But don't go out and just start trading that just to trade. In fact, if you want to be a little bit more conservative, you might want to look at a number of different upstream oil and gas producers, and instead of trying to go long with calls, you sell put spreads, knowing that, hey, you could take possession of this if the talks do go through, and if the stocks do appreciate because oil prices move higher, you can make money simply by selling spreads to the downside. Okay, let's get into it. Ugh. Your emails are going to be flooded for the next, 3 months by every self-appointed financial expert in the world. And they're going to say that the AI trade is going to create the most lethal downturn for any number of sectors over the next 18 months. And they're going to tell you that you need to buy puts on the following companies, even though that is the wrong way to trade this. AI sell-off continuing. The Mag 7 names are declining pre-market. AMD is partnered with AI data centers. That's the thing, right? The AI data centers will remain the long trade. The anxiety is on two different parts, right? The first is going to be on the idea that AI spending is not going to lead to profitability. That's where this massive $500 billion CapEx element lives. The second side of this are all of the industries that are getting whacked right now. So WPP, advertising, these stocks have already moved. Now, some of them might go completely out of business. But if you're trying to short companies based on what is happening in these spaces, you need to learn everything about what happens with implied volatility, probability of profits, everything that comes with it, right? Very important to note this. 651, Iran's foreign minister says we have reached an understanding on main principles with U.S. As you can imagine, my presentation was written at 6:30. Nailed it. All right, WTI crude, we're at what? We're still up overnight. WTI crude is up 1%. Brent crude is down 0.3%. That's it. Okay. You have to understand how probability of profit, implied volatility rank, and remember that market makers, dealers want to sell you puts. So is this an expensive put that I'm buying and trying to short a company in the legal sector? These are questions that we have to ask, and we're going to set up a framework today. I'm on for an hour and 15 today, so that is at 1:45. We'll go through this. We'll talk about the AI trade. We'll talk about the sectors that may be disrupted, but let's focus on the right way to trade it, and that's going to be utilizing spreads instead of individual just one straight put to the downside. And the reason is we have to go through the mathematics of all of those positions. All right. Palo Alto Networks, MDT in focus. PANW is what you're looking for. And this is going to be an important one, right? They announced a deal to buy Angetic this morning, which is an AI native protection company. There's a lot going on here. But breach response, AI cybersecurity, that sector is not going away. Neither is AI war defense. That's going to be a critical investment over the next 5 years. And right now, companies are calling for, analysts are calling for a 0.94 non-GAAP EPS and about 2.6 billion in revenue today for after the bell. Why does that matter? Well, it matters because this is just another story in the AI space. Pretty simple. All right, so real time, quick for a poll. Do you think that a deal is going to follow through with Iran? So type deal, type no deal, type stall, type status quo. Drop your vote in the chat. We'll get more into this. But that said, the big one is Palo Alto. And that's your key to understanding enterprise AI energy or AI security spending. So are these companies still spending on cyber despite the broader AI sell-off? That's the question. Before the bell, Medtronic medical device reads, Cadence Design Systems, CDNS, after hours. That's chip cycle reading. Also, Leidos, Republic Services, Vulcan Materials, but PANW is the one that we have to watch the most. All right. Big Dave likes pizza. That's really the story of the day. Gold's pulled back under 5,000. We're at 49.29. Well, where are we right now? Right? That's what matters. Where are we right now? 49.41. Okay. So what's going on here? Pretty simple. Pretty simple. Silver's been getting crushed, right? We're down 4.5% on that. There's very thin liquidity that's making everything more volatile at the moment. And here's the thing. ANZ just raised their gold target to 5,800 an ounce for the second quarter. Central bank demand is still highly intact at the moment. And it looks like dip buying has been happening and looks like an opportunity to me if you have a stomach for it. The key data will be around jobs coming this week. Or forgive me, the CPI consumer sentiment, which is later this week. And if the dollar drops and gold bounces back, keep your eye on this moving forward. All right, crypto is, it's kind of holding up. Think about crypto, think about Bitcoin. It's better than expected given the risk-off move. We've seen a lot of projections and a lot of people saying this is going to 4,500 by the end of the quarter. I will note that we are heading into this period over the next 45 days where taxes are going to be paid by companies. And if somebody needs cash and they've got a lot of crypto on their balance sheet, that can be one of the easy ways to harvest some losses, but also just move over to cash, pay off different taxes. Bitcoin's at 67,000. That's down a little bit. Obviously, we're down from that 130,000 level, or near that level that we were at all-time highs back in October at the top of the liquidity cycle. Ethereum is struggling to hold that 2,000 psychological level, and BTC is going to need to hold about 65,000 in support. That's going to be a key line in the sand. This is going to be an interesting conversation about how Iran impacts this, and we get a risk-off move. Crypto will feel it, but any type of positive headline out of Geneva, BTC could be back at 70,000. It is a headline-driven tape at the moment. Need cash. All right. I have no idea what that means. All right. Hey, what are we doing here? Well, we're trying to get our screens loaded up, and we're having some technical difficulties this morning. So I have to go to Trading View real quick. These are names that I want you to keep a very close eye on today. CAG, we are back. Yeah. CAG. We talked about Conagra. We talked about this stock that has just been getting pummeled for the last couple of months. And I said, hey, do me a favor, steer clear of this and just continue to follow the trend of lower highs, lower lows. We turned back around at that $15 level, and now the momentum is turning back. Right? Turning back. So we continue to look at higher highs and higher lows. I like the idea of trading Conagra down at the 18 to 17 level, selling spreads. You don't have to try to chase any of these things, and keep in mind, if there is any action or any injection of capital that comes in to our equity system through, say, the Federal Reserve, and we're going to talk about why that's a possibility in the next couple of months, just recognize that you don't have to chase. So if we look at CAG, what we can do is sell to the downside. Stock continues to break out higher. I'm not crazy about owning Conagra, but I can be pretty content looking at something like the 1918 spread for March. Looking to try to make somewhere in the 20% range, and then turning right back around and taking possession of the stock if it does pull back. It's a pretty weak options chain, to be very honest with you, and the fact that the 19 is at 38 cents, 35.40 spread, but the other option is just to buy the 19 and sell maybe the 21. Pretty simple. Ah, we're back in the cruise lines again. Ugh. Look, I want nothing to do with this, and in fact, I actually would view this as a negative momentum stock I would wait until later this week to trade NCLH, and I'll tell you exactly when to trade it, particularly if you're using volume weighted average price. That's going to be after the Consumer Sentiment Index on Friday. So what you'll be looking for is some sort of reaction. And on a Friday, when there's options that are being traded across the board, what does that give us, particularly in this environment? Third Friday, it gives us an opportunity to trade short duration options same day on Friday on a high momentum stock. So just add this to your radar. Look for these bounces, look for these moves. And we've seen, right, $2 on the volume weighted average price bands. First deviation, second standard deviation, third standard deviation. And if we get down here, you're looking for a move back to VWAP. You're looking for VWAP to revert. And that becomes an opportunity. All right. On the other side, Hershey. Like this company, great company, kind of has that See's Candies feel to it. Momentum has been pretty good, right? 192. This is a stock to follow around key moving averages. That's the MACD. Look for a crossover on MACD. Where do we sit right now on that? 1 second. All kinds of computer issues today. We're having some issues with Verizon in our area. That's why the music sounded so weird to me today. Hershey is above its 8-day moving average of 221. Its 20-day is 211, and its 50 is 200. So with Hershey coming out of overbought territory right now, possibility of a pullback to that 20-day. That's going to move. You've already had a move down about 20 bucks. This is supposed to be on the positive side. Well, same thing here. Lower highs, lower lows. Make sure that if you are shorting this, and that's kind of how this actually looks at the moment, you want to be aiming at this stock if it is under its volume weighted average price, that blue line. You don't want to be shorting down here in the third standard deviation. That's where you can have a squeeze. It's where stocks can turn back around and just take off for the day. So again, lower side of volume weighted average price, and look for a continued burn lower. Short duration options, look on Friday, see if the trend continues. TU Stone and Urban Outfitters. Urban Outfitters, I thought they were supposed to be swallowed in the retail apocalypse. Ugh. Range bound too. Not a whole lot going on here, but the trend, if you see it, is lower highs, lower lows off that top beginning of the month. And momentum creates momentum. A move back down to the $67 level seems in order, and the way to trade that, buying somewhere in the $70 range and selling the 67. That way you're not exposing yourself to any potential higher implied volatility rank. I don't know what the IVR is at the moment. I will have all of that stuff prepared for later today. STNE. Heyo. Stoneco. Yeah. Breaking under its 20-day. So there's not much juice left to squeeze here. This is a situation, if you're going to follow this lower, you're buying the 17 and maybe selling the 16 for Friday with a very tight stop. It's coming out overbought at 18 bucks, and we got a crossover on the MACD, but for the most part, that's a tricky one. I would just be looking for a retest of the 100-day EMA. And then we've got the SQQQ, the XLU, and the WBD. So let's talk a little bit about trading and shorting the Nasdaq. I remind you that the SQQQ is a inverse triple leveraged short of the S&P 500. No, of the Nasdaq. Forgive me. Ooh. All right. if you are trying to trade this, this is typically not something that I want to be in for more than 3 to 4 days. And the trend right now has been more selling in the Nasdaq than buying. But once again, this is a tool to be utilizing, like volume weighted average price. We don't want to be buying the SQQQ all the way at the top, right? That is an expected band move, and because if the SQQQ is running higher, that means the futures on the Nasdaq are dipping, and that the Nasdaq is down. And what do we notice when we get down into third or fourth standard deviation? We notice a pop. There's no news at 8:12 this morning that drove some radical run that moved the Nasdaq futures, or the Qs, forgive me, up $4. There wasn't. And just be aware that when you are down here, if you hold an SQQQ position and there is a reversal here and this runs up, well, an SQQQ will break down. So really, the place to be buying or day trading or trying to swing with the SQQQ is when the Qs are overbought, when the Qs move into 4 standard deviation of buying and we're looking for selling pressure. That said, if you are going to short the S&P, the Qs, there are other tools out there that are a little bit cheaper. The PSQ is an inverse, one directional long, 1-to-1 for the Nasdaq. So this goes up 1% when the Nasdaq QQQ drops 1%, the PSQ. And that has an options chain to it as well. Just be aware that there are more tools in play. The XLU is in focus. Utilities are holding up at the moment. And a lot of different ways that you could trade this. Again, the momentum here is very, very strong. And this is when we talk about that AI trade, right? If you're doing a pair trade where you're going long the XLU and shorting sectors that are going to be impacted by the Armageddon that is known as Jopocalypse, the utilities are the ones to focus on. Look at companies like Duke, sell Dominion, right? Look at selling spreads to the downside. Look to generate capital. You don't have to chase this stuff. But momentum has continued to break out on the XLU. There is a leveraged ETF or ETN for this. I forget what it's called. That means you shouldn't trade. Oh, this thing's back. WBD. I don't know, man. It's just it's a nonstop chorus of chaos around here. So WBD's had a nice move higher. We want to take a look back, go back 3 months. Where is there still juice to be squeezed out of this? Maybe back up to the $30 level. But remember, this is still a process, right, with the buyout. All right. Sleeping in. All right. We got 10 minutes left. Let's talk a little bit about AI. So the key thing to be focusing on, right, and this is a preview of the things that we'll talk about later today, is an understanding of the optimal ways to be trading around various sectors that will be impacted negatively by the ongoing disruption, if you will. We've had a couple of big stories in the last couple of months. The big one, really, at the end of the day, is the impact on advertising. I mean, you can do entire campaigns. You saw what happened with the Super Bowl. The big impact, the big focus on AI. And now there was a huge disruption over the weekend. There were a couple of videos. I highly encourage you to watch the utterly hilarious video of Star Wars with Anakin and Natalie Portman. But then also there was something created over a week and a half ago of a scene with Brad Pitt fighting Tom Cruise that looks like it's a $150 million movie and was created in about 6 minutes. Right? So the focus here is who is going to try to lead these names. And again, XLU seems to be the long side on this. On the other side, oh, that's the whole joke, Don. That's what people use AI for. That's the joke. On the other side of this, you look at WPP. It's been getting crushed. You look at some of the legal companies. They've been beaten up. You look at some of the other companies that operate in this space. It is going to continue to be a narrative. And once again, if we go back and we look at, look at an Urban Outfitters, for example. And let's go back 10 years, right? There were these periods of time where these stocks were getting very beaten up because of that ongoing narrative. The idea that retail was going to be put out of business by Amazon and e-commerce. Well, that's the same thesis here, but done so at a much more aggressive manner. And then, on top of that, you are seeing names like VNO continuing to be hit as well, right? These are real estate names that are getting beaten up pretty badly. And what's going to happen to the real estate that underpins so much of our economy and white-collar work? Now, David's saying, what I'm hearing in AI in my profession is the misinformation, outright incorrect information, causing problems for those depending on it. Yes, that's going to be fascinating to see what happens, because anyone who is using things and not actually being accountable with it creates a problem. I've had in the last month a client ask me for something that for a deliverable, only to not realize that they had had AI write an email for them that said they would get back to me first before taking any steps further on something. And then when I brought that up, they said, oh, I don't remember doing that. It's because you're using AI for everything and you're not reading what you're sending out. That's going to be a problem. So there's going to be an accountability gap here, and that's going to take some time to get over. That's going to be a couple of months. But people are going to have to learn their lesson. When you're using a new tool or you're relying on a new tool and you think that the new tool can just do everything for you. Remember the guy who was driving the Tesla and got in the back seat and took a nap and it just crashed? That's the type of thing, right? All right, so if I'm going to try to short of something like VNO, or I'm going to try to short something like WPP, I want to remind you, right, these stocks are getting beaten up. They've already had a drastic downturn in the last year. WPP is down 60% in the last year. I want to point something out, though, right? The implied volatility rank for, or implied volatility for WPP right now, the current IV is 42.9. The IV percentile rank is 87%. So it's 87% higher than previous metrics in the year, right? The implied volatility is 42.9. That is not a place that I am straight up buying puts. I'm not going to straight up buy a put at that. Remember, elevated implied volatility, that broker wants to sell you that. The purpose of the market is to sell. So what might I do? I want to obviously look through the options chain and walk and just basically explore the fact that the odds are against you. The odds are against you. Right now, if you buy a put on WPP out into March, first off, the spread is just way too wide to do anything. But I'm just hypothetically speaking. If you're focusing on these names, right? Your probability of profit, if you're looking at somewhere around one tick lower than where the stock is at the moment, it's going to be about 30 to 33% probability of profit. If you do a spread, though, you're going to get up to around the 40s, and you're going to be able to sell that other put at a higher IV. It's going to be a little bit lower than what's at the money, but that's going to act as a cushion. You can define what your risk is, you can define what your goal is, and then in the event that it does move and it goes against you, the put that you sold on top of that in a put spread will operate as a little bit of a cushion for you in case there is a squeeze. Now, on top of that, let me remind you that when it comes to a lot of these names that are getting beaten up right now, it's important to note that one of the things that we're looking for along the way is insider buying activity to pick up. There are going to be purchases made by executives along the way that are going to either say that the problems that are happening at their companies are overblown by AI. And there was an example of this morning, and that was in CHRW. That's CH Robinson, which has been beaten up a little bit, right? This is logistics and freight brokerages. This is one of those industries where people are saying AI is going to be able to book and handle and manage freight better than other people are. And what did we see today? We saw a pretty sizable cluster buy at 163. Stock has moved already up to 170. Where are we today? Hello. We're at 178, right? Lows down here at 149. The stock got cut by 25%. Executives buying their stock at 163, 168, 167, 162. I want you, as traders, to pay attention to insider buying on these names. Any sector, and we'll go through these sectors today, right? We're going to be back for an hour and 15 minutes today. We're going to look at these top companies, the companies that have been beaten up pretty badly. And I want to remind you something, all right? This is a very important lesson in how markets operate. A couple of years ago, I went through all of Cathie Wood's purchases at ARK Invest. There were billions of dollars in selling and only $5 million in purchasing, one purchase of all the top 10 stocks. And I asked her point blank at a conference, why are you buying the stocks if the executives aren't? So when you think about what's happening with these AI names, if you think you are smarter than the executives, just understand something. If the executives aren't buying their stocks that are getting beaten up by AI, you should not. But if they are buying their stocks, it sets up an opportunity for you, very briefly, to trade around it. And we're going to look at that 163 level today on CHRW and look for an opportunity to trade it if it comes back. Don's coming up right now, 10 minutes from now for the open. I will be back for an hour 15 from about 1:45 to 3 o'clock. I hope everybody has a great trading day. If you have questions, support at TheoTrade.com. Put Garrett in the subject line. Enjoy your day.